Ladies and gentlemen, welcome back to the channel. Here in this video, I will give you a brief synopsis of the Fed, my interpretation of the Fed, and what I think is coming next for markets, and potentially what's coming next for Tesla stock. Oh boy, Tesla had a 4% day today. 4.25% to be more specific, up a 0.5% here in after hours. This was almost a 5% day for Tesla. Now, this could set us up for a larger rally, and I will discuss that with you here in this video, as well as we will take a look at the final option numbers for the day today. As you know, there's a lot of option activity that goes into the end of the trading day, and we'll see post Powell if that was good or bad. Now, we do have some economic data coming out tomorrow, as well as some larger earnings. We will also discuss that. But first and foremost, a quick synopsis on the Fed. I'm sure you're already kind of familiar of what happened with Fed Jerome Powell today. Now, the markets were really a tale of two stories today, right? And really over the past couple of weeks. The Russell has been massively outperforming, expecting that September rate cut, and really pricing that in, whereas the Mag 7 was selling off for that same exact reason, right? When the Fed reduces rates, that's not exactly great for the Mag 7. Mag 7 companies are going to take in less interest on their cash, and it really doesn't benefit them. So you can see some outflows to those areas. Well, that is what has been happening. So it's no surprise today. Fed Jerome Powell gets up there on his podium. He sounded very dovish. In fact, he almost confirmed September as the first cut multiple times. And really, if you want to read through the lines, he almost did confirm September. Now, he said the typical, they're data dependent, and they're going to evaluate the data as it comes in and make their judgments based on each meeting. But he said multiple times that it was almost appropriate to start reducing rates as soon as September. He said he could envision a path where there could be 0 cuts this year, or a path with multiple cuts this year. That was basically confirming the market's expecting 3 cuts this year is not outlandish. Like, that is a possibility, and potentially even more than that. It really depends on the economy. And Powell did sound a little bit more hawkish or defensive on the economy. He did go on to say that if you exclude some of the inventory numbers of the GDP report, government spending, and just really look at underlying demand, he said multiple times that demand looks okay in the economy. It's not a red hot economy. It's not a terrible economy. It's just an economy that has normalized and is doing well again. He also stated multiple times that he does not want to see further deterioration in the labor market and or the economy, but specifically reiterated the labor market multiple times. And I think that was very important, because if we get another rise in the unemployment rate this Friday, then that's another solid step forward in actually getting that September rate cut. Now, what the Fed also acknowledged was this broad-based disinflation, that now you're seeing housing going through disinflation. You're seeing services starting to see some disinflation, not just goods, not just energy, although that's very volatile. You're actually seeing disinflation really across the board. And that was something that Powell really stressed as a positive, that has changed from, the period in time from last July when we had 7 good inflation reports in a row to now we just had 1 quarter of good inflation reports in a row. You're actually seeing this last quarter was broad-based deflationary pressures or disinflationary pressures. So Powell did talk about that quite a bit, and really it was a more dovish Powell. Again, I think the markets were pricing in a super dovish Powell. We got that. So what happened to the Russell? The Russell went up almost 3% at one point, ended up closing the day only up a little bit more than 0.5%. It does seem like a little bit of a sell the news event after that blow off rally that you've seen during the conference. So I would not be surprised if we do see the Russell actually take a little bit of a breather over the next couple of days. It doesn't necessarily need to crash or go down in any kind of huge way following what Powell said. I mean, the only bad thing, if you want to call it bad, is Powell did not explicitly say the fight on inflation is over with and they're going to start cutting rates in September. He basically said that, but he didn't outright say that. So does that mean the Russell needs to collapse? No. But does that mean the S&P and potentially mega cap can start to outperform for a period in time again? Yes. This could also mean we could see a more broad-based rally with maybe a little bit less participation from the Russell and more from the S&P. Like maybe the Russell has half of 1% green days and the S&P's up 1%. Something along those lines would not surprise me over the next couple of days. Now, specifically with Tesla, the data that we get over the next 2 days or so, the earnings that we get over the next 2 days or so is specifically going to affect Tesla a lot. Now, Meta, you can see reported earnings. The stock's currently up about 4% in after hours. It's going to be volatile heading into tomorrow. Meta did fall quite a bit heading into this report, but it's still trading at very elevated levels overall. You could see Nvidia had a crazy day today, up 13%, up almost 2% in after hours. Google, Amazon, Apple, they all had really good days today. Now, Tom Lee over with Fundstrat says the probabilities favor the market seeing a July FOMC as dovish, leading to a strong equity rally led by small caps. He thinks you could actually see a gain of 4 to 5% over the next 5 days in markets, mainly led by small caps. Now, following that speech from Powell, doesn't look like it as much. The S&P kind of stayed flat. The Russell sold off pretty much all of those Powell gains. So we'll see over the next couple of days. But for an individual like Tom Lee, a lot of you guys, follow him, and he has been very correct in recent years, just calling these rallies or calling the corrections. And he is overall bullish. Now, in terms of earnings that come out tomorrow, you have some less known or less notable names like Moderna, Canadian Natural, Crocs, Mobileye, ConocoPhillips, Wayfair, SiriusXM, and others tomorrow morning. Tomorrow in after hours, you have Amazon, Apple, Intel, Coinbase, DraftKings, Roku, Block, Marathon, Booking Holdings, and Mercado Libre. So Amazon and Apple and Intel list Coinbase, DraftKings, Roku, and that even Square for that matter. On a market cap basis, this is like almost three Russell 2000s. So depending on what Amazon and Apple report, that's going to have a large influence on our markets. Now, tomorrow morning, we also get ISM manufacturing PMIs. I don't think that's going to be as important. We are expecting manufacturing could actually get a little bit better than last month, basically across the board. ISM manufacturing PMIs last month came in at 48.5. We're expecting 48.8. So we're expecting a little bit better for the manufacturing data tomorrow. Although I don't think it's going to move the needle, just considering you had Powell today and you're going to have big tech earnings tomorrow in after hours. That's really what the market is going to be focusing on. And really, as I said in the last video, I think Tesla could actually benefit either way today went. If small caps led, then I think Tesla could do very well in that scenario because it's very interest rate sensitive. On the other hand, if Mag 7 leads, I think Tesla can also do very well. And that's exactly what happened today. Tesla really held the gains throughout the day today. And I'm looking at it like this. Over the next couple of days, I think Tesla does well regardless and likely goes back up to that 243 level, right around that 20-day moving average, at least here in the short term. The option activity here on the day today via the interesting flow sentiment, you've seen 24 different trades totaling $16.8 million with a positive order value of 74%. So hedge funds, institutions feeling very bullish on Tesla. You can see on the day today, it looks like you actually had about 94,000 shares that were on net cover today. So that did help fuel some of the upside for Tesla. You know what you think about all of this information down below in the comment section. Earnings, Powell, economic data, Tesla specifically. What are you expecting over the next couple of days for Tesla stock? Thank you guys for watching. Hit that like button as well as subscribe to the channel if you have not done so already. If you guys also want to come trade with us live in real time, check out that link down below in the description of this video. You guys have a fantastic rest of your day, and I will see you in the next one.